Hello and welcome to Investing Confidential. Before I start, I just want to say that what's going on in the Middle East is horrific, and I think we all should definitely pray for all the lives that have been lost and the human toll. I mean, it's beyond comprehension, beyond comprehension. Um, there are financial ramifications for these conflicts, which I'm going to lay out. But the bottom line is all of this, whether it's the conflict in Ukraine, the conflict now in the Middle East, what's going on here. I mean, this is so inflationary, and yet any chance that the talking heads believe that there's a chance for rates to come down, they throw it out there, and there's all this false hope. And if you've been listening to me since the beginning, I've been telling you that rates are going to stay higher for longer. Okay, this is now consensus. Was consensus a few days ago, so I'm a little worried, but I'm not worried when I see all the data. And first, before we go into the PPI that just came out, I want to show you something pretty disturbing. I think it's very disturbing. First, here, look at this chart. This is crude last week prior to the attacks in the Middle East, in Israel. As you can see, crude got crushed, and there was no news. Okay, the talking heads celebrated it. Everyone's saying, "Oh, like crude's coming back in," blah blah blah, and nobody was questioning what was going on. And if you look at this chart here of natural gas, at the same time, natural gas is spiking, which doesn't make any sense, right? So, look, the natural gas and crude go in different directions, but in this current situation, it doesn't make sense. But I think I know what happened. The prior week we had CPI, we had PPI today, which I'm going to say we had CPI, and it was worse than expected. And I just, not that I want to be conspiracy theorist, but I mean, it doesn't take a lot of thought and looking. Well, you have to look and see what these morons at the U.S. in the U.S. government. I mean, this is what's happening. Okay, and here it is. Okay, here's the SPR. They told us months ago that we're going to refill the SPR. Guess what they've done? They haven't refilled it. Not only have they refilled it, they sold it off more. Okay, as you can see here, we're at the lowest level in history. We're lower than we were even a few months ago when they told us they were going to refill it up. So it doesn't, 2 and 2 does equal 4. These morons, after the CPI, decided to use the SPR and bang down crude oil. There's no other way to explain this. And, then you had the problems in the Middle East on Saturday, and crude has exploded back up again. Bottom line, folks, the U.S., the White House, and I'm blaming the White House here because they're ones in charge. The U.S. energy policy, okay, which dictates the policy on the strategic oil reserve, is a disaster. Okay, we have conflicts now in 2 places in the world. We have flybys going over in Chinese flybys going over in Taiwan, and we have no strategic oil reserve. Okay, it's gone. The current White House wiped it out, and with oil spiking, there's no way to replenish it right now. I mean, this is a disaster. Okay, and it's inflationary. Bottom line, and let's look at the PPI data. Just came out. Okay, look, no surprise, it's hot. Okay, as you can see here. I mean, forget about food and energy. That's a joke because we all need to put gas in our cars. We need to eat. So when they tell you to focus on PPI, food and energy, just disregard these idiots. Okay, look at here. Look down on the last column. Change in final demand from 12 months ago. Okay, these are the last 12 months. Starting, you could see inflation PPI was very high. It's come off, and then starting like in May of this year, it started to low, and then it became June. Everyone was cheering, right? That's when the market was peaking. Everyone was cheering, and then look what happened in July. Big reversal, massive reversal. Then August, and now September. So things are getting worse on the inflation front. They're not stopping it, and this is why rates continue to go up despite all the rhetoric out there. Rates continue to go up. And it's inflationary. Everything's inflationary. Investors are a couple of days ago when the market was, investors were celebrating that they think rates have peaked. Oh, the Fed's going to do one more. Look, investors who have that opinion have no clue. Okay, the Fed is looking at data like the CPI, like the PPI. They're looking at something different. They're looking at wages. And again, it doesn't take a rocket scientist. You don't have to have a degree from Harvard to outsmart the markets. Look what's going on today. Look at the strikes, UAW. And now we've got Mtruck, as you can see. I mean, Mtruck. Trucks, remember, I said this before, trucks are the engine of every economy. There's no way around it. When trucks go on strike, and like they did in Brazil a few years ago and what happened in Canada, your economy stops. And as you can see here, okay, this is Bank of America data. We're going to be in the next few months at a 40-year high for striking workers. I told you, all you need to do is open the local paper. Local municipalities are striking. Rightly so. Look, these workers can't afford to live anymore with this inflation. No one's being paid a living wage. And they're saying enough is enough. Okay, and they want higher wages. Again, all of this is inflationary. And this is what the Fed is focusing on. And if you want more anecdotal evidence that inflation is creeping up everywhere, look at this problem, the problem with shrinkage. Okay, I think I explained what shrinkage is, but I'll do it again. Shrinkage is a financial term for theft. Okay, shrinkage on average for an average retailer is around 1.2% or a little less, depending on the retail. Shrinkage in this country is out of control. Okay, and it's not just San Francisco and New York. It's happening everywhere. Nobody wants to arrest criminals. That's the bottom line. That's what it comes. Look, I don't care how politically correct or not. This is the bottom line. Why is shrinkage a massive problem in this country? Nobody wants to arrest a criminal. Okay, it's inflationary. Totally inflationary. Why? Because what's happening here, folks, as you can see, you know the headlines, stores are closing. They're going out of the inner city. They're going out of these crime-ridden areas. And they're also raising prices around to offset the shrinkage. And then what's left in these underserved areas? You've got mom and pop stores that are left. And if you ever gone into a mom and pop store in a underserved or depressed area, you go into the store, look at the prices of goods. They're double what you can get in a big box store. Very high prices, and rightly so. So all of this is very, very inflationary. So inflation is coming from all aspects. And again, you don't see this in these government numbers because I told you the government numbers are manipulated, completely manipulated. Okay, and here's real rates. Okay, real rates are, what they are. And real rates continue to move higher despite the weakness in the bond market recently. Real rates haven't weakened. Okay, these are real rates adjusted for inflation. Okay, now the White House points to manipulated data like the ADP non-farm payrolls. They celebrate it. Yay, 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 yay. The reality is, you can see this number, when you look at the components, again, nobody looks at the components, they look at the headlines, right? But look at the components. It's all hospitality. What is hospitality? It's hotels, restaurants, etc. Folks, I showed this before. I'm not going to do it again. The reality is that hospitality is hiring people, but they pay nothing. They pay very low wage jobs. Okay, the hospitality industry is notoriously one of the lowest paying industries in the country. They do not pay a living wage. Okay, the average person working in a hotel, cleaning up after people, they get $20,000 a year. I mean, that's not a living wage, folks. Those wages have to go higher. Hospitality companies, hotels, to be hiring a lot of people. I don't know who they're hiring, but certainly there's a lot of people coming into this country that'll take any job. Okay, bottom line again, Hospitality industry, throw it out. All those jobs, they're not high-paying jobs. You can't live working you just can't live just working at a hotel or a restaurant. You need to subsidize your income or work two jobs. This is not in these numbers. Okay, again, manipulation of numbers. So bottom line is non-farm payrolls. It's a manipulated number. It doesn't tell you what's really going on in this economy. This economy is a disaster. Okay, and the idea of rates for longer, again, it is a little bit of a consensus, but you can't get away from the reality. Look at and so what are the results of all this? Look at housing affordability. It's the worst on record. Okay, you see it in the rent versus buy levels. It tells you the truth. I mean, this is a nightmare, an absolute nightmare. People, and by the way, it's going to correct. I told you before, this is going to correct, and it's not going to have much effect on inflation. I'm telling you right now, but housing prices are going to collapse. They have to. As you can see, there's no way they continue at these levels. They're going to collapse, which is good. So as you see, mortgage applications they're crumbling. Who's going to take out an 8% mortgage? Now, my first mortgage, by the way, was close to 7% or 7%. It's a different time, a much different time. And again, another problem with all these rates staying high for long. Look at the paper losses in banks. Okay, the talking heads in Wall Street say, well, the banks never sell. They don't have to sell. That's true to a certain extent. They'll hold to maturity. But if you're a bank, like we saw in the UK when this first thing started to happen, like late last year, I mean, you can't, if you're hedging with derivatives, so a lot of these guys are, there's a mark to market or someone asks for more collateral, the bank's gone. And we're going to see this. And we're probably going to see it more for insurance companies. This is a ticking time bomb. They're trying to hide it, but it can't go on for much longer. And then another result, look at the credit card delinquencies. They're at an all-time high, folks. This is a disaster, an absolute disaster when credit card balances at our all-time high. So guess what? Delinquencies are going higher. Why? Because of rates for longer, and look at the rates on credit cards, all-time high. So we got all-time high in credit card rates, the banks making a fortune, but there's a big delinquencies. No one's paying their bills, and the balances are in the trillions. I mean, come on. Again, 2 + 2 = 4. And then we've got small business defaults. I mean, this is, again, I've talked about this before. Small businesses are the engine of growth in any economy, and small businesses are defaulting at record numbers. And here's something that doesn't make sense. Yet, as you can see here, the big companies, and I touched on this a month ago, they're binging on debt. They're doing as many debt deals as humanly possible. It doesn't make any sense, but it does if you believe rates are going higher. Like, why would you float all this debt at peak rates? It doesn't make any sense. Now, these CEOs aren't stupid. They know that rates are going higher. So look, I'm going to take, you think I'm crazy for floating a bunch of debt at these high rates. You think they're high. I think they're going higher. So why not? That's the problem. That's the problem. So unless all these CEOs are morons, which they're not, I think the government's full of morons. You need to be careful here, because this is what the companies are actually doing. So bottom line is more volatility ahead, rates higher for longer. They'll come down, but they'll keep going back up. Okay, here you look at just some flashing points here. Here, TLT. A lot of people are buying it. They're buying calls. They think TLT's bottom. Look, as I said, rates higher for longer. What you should be very careful of is when you're taking this trade and trying to catch a bottom on TLT, you're fighting the Fed. And the old adage is, don't fight the Fed. Okay, but in the short term, here you see the put call ratio flashing bearish. Okay. Again, we talked about this. We're going to get these bear market rallies, and we'll probably, due for one here. We at the beginning of something a couple of days ago, but everyone's becoming buying puts, so we're gonna might have a little bit of a rally, but sell it, folks. Things are gonna get nasty. Okay, commodities are going to start to keep going up. I told you the US dollar is going to get pounded at some point very soon. Hard assets are the place to be. Emerging markets, you got to start protecting yourself. You got to start. Gold right now is broken, but gold is going to come back. I would wait till it breaks out again, but hard assets are where you have to be. Inflation all over the place, rates higher. So as an investor, be careful out there.